The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour. And this is the Friday edition, last day of the week. And very interesting to see that the Dow is down minus 38. S&P's down 6. Oh, am I seeing that correctly? Oh, look at that. All right. So thank you to Steve and Tom for 2 great hours. My pleasure to be here every day, every market day, that is, between 11 o'clock and 12 right now, this time that you're listening to me. And don't forget those Tiger dollars. Go to the front page right now. Check it out. 40% off. Amazing. And, of course, if you have a particularly favorite a newsletter that you get, this is the time to get it. If you, of course, the other thing to consider is that these courses that we have, like Master Trader Series, in my case, it's the Chapman Wave webinars. These are all things that you could get huge discounts for. So check it out, please. Take the weekend. This is the last weekend that it's available. It is just fantastic. I know people tell me all the time, thank you for those Tiger dollars. Really saved us a bundle, especially for something that we intend to renew in any case. So go to the front page, check it out. Now, I've decided I'm going to go right to this here. This is the what I call the naked chart of the E-minis. This is the 10-minute chart. And let me show you. Remember, in the Chapman Wave methodology, I always say, look for the lowest, most obvious low bar, and then merely count each successively higher peak. Well, we made a peak D, that fourth highest peak at 1992, round number high, back on the 21st, what's today? 22nd, yesterday, at 3:20 in the afternoon. And then the E-minis went sideways, and they made a little mini, and I love this. Remember, I talk about this when you're talking about gap ups. A sudden spike to the upside. Doesn't have to always be a gap, but it creates some kind of a flagpole. And then there's a sudden push down that you can go sideways in a rectangle formation. And within that rectangle formation, usually within a short time frame, but even within that same time frame that you're looking at, you could get another series of peaks that go A, B, C. In this case, it went to peak C1 and peak C2 and failed underneath the 1992 high. Pulls back really sharply, comes down. Now, this is very interesting. And this is one of the things that I hope to be teaching in my next webinar that I have. How you can use time frames. Look at this. This is the bar right there. And that's the bar in the 120-minute chart that made an exact channel line support with the up channel that went to a peak D at 1992 in the 120-minute chart. Funny how these things look. D in the 10-minute chart, D in the 120-minute. How did they know? Look at this. I'll just grab it for a moment. You've got an E, and there was a D with a sudden spike to the upside. I call that, it's almost like a rogue wave where the technicals were failing, but there was that one wave that didn't see the sign that said high tide at noon, and at 12:06, whoosh, it goes up a little further than all the other waves. But by the time you look around to see where the wave is, you find that, in fact, the tide is going out. And that's exactly what seems to be happening here in the NQU14. That's the September E-mini NASDAQ 100 September contract. Well, nothing yet of serious consequence until, and I think it will happen, there's a break of 4,036.50. That was the low at 9 o'clock this morning. And then the real test comes at 4,034, and 4,028, that whole area. All right, so let me just get rid of this. Let me get rid of the 10-minute chart just to show you that it went to a peak C1, C2 when patterns form. They very often repeat. Look at that C1, C2 right there. That's almost like a D. Needed just 25 cents to go above 1991.50, and here it stopped at 1991.50 a couple of times. And this time it went all the way back up, and it went to 1991.25, 25 cents less. Peak C1, peak C2 is like a D, pulls back. And now what we're looking at is the major support is going to be for the rest of the day into Sunday evening. Will the 1981.50, that's a 10-point disparity between the highs and the lows, will that 1981.50 be taken out, support be taken out? My thinking is right here, yes. Now look, there's a chance that finally we can make a peak B in the daily chart if there's no new high above 1992 to 1992.25. Because if it's under 1992, that means you finally made a peak B. But the MACD is very good. Stochastic's very good. We are intending from our opening call subscribers, we are long, actually, we've only got long positions at this particular point. But we're hoping to add something with a lot of whipping power just for that final, and I think we'll get it next week, leg C and leg D to the upside. Now, let me explain. That'll be if there is a peak B in the E-mini S&P, that means next week we should see C and at least a D. All right? Now, let me get rid of this for a moment. I'm moving it aside. Now, let's go through the numbers. The Dow, INDU, this is Technical Friday, so I want to go through some things a little bit more technically than usual. If the stochastic at 94 is able to hold, I would not be shorting. Not here. It's just, no. You could have said, oh, we might be fading earlier on. But right now, the MACD is strong. The histogram, those vertical green lines, let me just have a look here. Excuse me 1 second. Right there. Let me go to the front page of TFNN. I just want to see the chart as you see it, then I can make some adjustments on air. Log on. We were already logged on. Watch Tiger TV. Oh, it's so easy to do this. It's airing right now. I can see the chart. Beautiful. Okay, so let me just move this so I can also see my callers, if there are any callers. There we go. So what I'm looking at here is the Dow has gone to leg B and possibly a peak B if there's no new high bar above 17,074.59. You touch 59, that means you're still in leg B. You go to 60.60, it means you've extended leg B. You fail to break above 17,074.58, you've made a peak B today. If it's an inside bar like this might be, that's going to be very positive, meaning that in a bull phase, usually you don't get more than 1 to 3 sessions before you go to a new recovery high. Bear phase is the same thing. Look at this. Look at the way down. Once you started down, you had one brief trough A, trough B, trough C, trough D, trough E. Let me just put that in here because I've got it on this chart here. This is what I show my subscribers every day. This is the Dow chart. I give a big explanation of what's going on there. I add to it at the bottom of that, and then I send it off. I've treated this just as a projection. I'm not sure it's going to work out. My thinking here is that it's more the date, that it's kind of midweek next week that we make some kind of a top, and that's 17,151 to about 17,220. That's the area that I think we will top out. I don't know. I'm just saying that these are the trend lines that have on occasion been extremely important. In this case, from the low of 20th of May, 16,341 in the Dow, to those lower troughs on the 10th of July at 16,805. It goes right through, and it goes to, well, it keeps going, but it goes to where the two will meet would be on the 1st of September at around about 17,268. That's just a trend projection. But the actual price says that 17,151 will become more and more important depending on how this peak B, when it's made, how deep it is. If it's deep enough that it actually tests on Monday, 16,940s, that's 16,940, that's about 70 points lower. That means one thing. If it doesn't do anything but just either touch or barely break the 16,984 low that was made today, and then makes a new recovery high, that's very powerful. That says we should be going towards the upper band in the 17,200s. A failure says that you take out 16,862 deeply. And that is the 9 period, that maroon line is the 9 period exponential moving average. But with the stochastic at 94% and the MACD still strong, MACD is not as strong as it was going up to the high of the 17th of July, but it's still strong. I don't want to be looking at shorts right at this particular point. Specific shorts maybe, but not generally, not as a market trend. Here's the other thing. The VIX index has climbed 4.25% at 1226. I'd say to subscribers, oh, it's gone. Where's all my, there it is. Over 1210, market slides. This is the VIX index. Under 1150s, market rallies. Peak F-top says be careful, support at 17,000 to 16,960 is going to be very important. So every day I've got my opening call. This is the overview and market today section, which is really an overview plus the markets, what to look for today, and I discussed how important that VIX index rallying would be and sustaining a rally, and how this peak F-top says, hey, there's a good chance we're going to be pulling back. And it didn't look like it was going to pull back after the early weakness when you suddenly got that strength. But that strength was really a fake out. So we're going to be watching this real closely. So now let me go to a couple of other things. Let's go back here. So the weekly chart, I don't even want to discuss the weekly chart other than to say there's a V-shaped pattern coming. We'll deal with that as the time comes. SPX.X is trading right now at 1988.41, down 3.96. So, and there's a very good chance that we make a peak B in the S&P as well. In the daily, stochastics way at 96%. That is really strong. MACD's expanding. And I thought I finished this. Now, why? This is interesting. All right, maybe I'm wrong. D, and then this goes A, B, C. I'm not sure. All right, I don't want to spend time on this, but the S&P says, yep, there should be a pullback here, but there's a lot of support in the 1976 level, about 8 points, about 100 points in the Dow, down from here. And the upside in the weekly chart says you're getting right into, you've made a new recovery high, and you're getting right into resistance. Now, the big question, has this recycled to a G/C or G/C/A? Is this brand new leg A in the weekly chart? Wow. I just can't say right now because the MACD and the stochastic are really not very good. And the unbalanced volume is hinting very strongly that we've got to have a little bit of caution here. So we'll see what happens. So you got the QQQ series. Now, those Qs have been stubborn as anything. They are still in leg B. The QQQ series, the Power Trust, is just amazing. At 99.01, have we made a high of 99.23? Well, the MACD is at 97% and really flattening out. Sorry, the MACD is very strong. The stochastics at 97% and really flattening out. That, to me, looks like strength. And you've got a leg F in the 120-minute chart. We've got a break coming up. Basil Chapman, 877-927-6648. Love to hear from you. Love to hear that you bought Tiger dollars as well to save 40%. I'll be back right after these messages.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back, and let's see. We've got right here. I had a couple of questions, and the questions pertain to certain stocks. There are a couple of questions in the din as well. Let me just go, first of all, to subscriber questions. So, the questions were, and I'll do them in order, LinkedIn. Where are we in LinkedIn? LinkedIn has had a fabulous move to the upside. If you're looking at the daily chart, it's just broken out. It's done everything that it should. It's walking the 9-period exponential moving average. It's trading at 220.14, up 94 cents, even a day like this where there's a general market weakness. The weekly chart made a high back in September, I think it was last year, about a year ago, and it was at 257.56. It got cut in half and went to 136.02 May the 9th, and now it's having a really nice retracement. Now it's tackling the area between 255, sorry, that was a mistake, 225, and the next candle of 234.48 back in January. What I'm looking at here is that in the cup formation from the left side to the right side, it should take it to about the middle of next week, and that area will be strong resistance. So the high today is 221.18. My suspicion is it's a big C in the weekly chart. My suspicion is that it's going to take a little bit of a digestive moment, and then it'll pop to the 222 to 225 area, and that's going to be where the real test of sustaining strength is going to come, and that's LinkedIn, because the monthly chart has a pattern that I always talk about, the falling axe. There it goes down. Now the upside has broken one kind of, it's like a GAN fan, almost just the look of it, that is, not the implications. For me, the implication is that it took out this month, it gapped up and then took out the, so that means on the very first trading day of the month. That's very unusual for monthly charts. So this does tend to do that in the beginning of the month. I think it did it right there back in August, a year ago. Oh, August is when it does it, huh? So let me just double check. When was the low? November of 2011 to 55.98. Wow, fabulous move. Five-fold move. So now what we're looking at is that the monthly chart is very positive price-wise. Technically, it's just starting to move to the upside. This is what I think I'm looking at here for LinkedIn. LinkedIn is acting very, very well. If there is a market correction, 191 is the gap, that whole area between 192.56 and 186.95. That was a gap up on the 1st of August. That will be filled together with the 186 200 period exponential moving average. We might have to wait a while before we even start the downturn. Next week is going to be critical. If you're in LinkedIn, all I'd say is raise the stop on a portion of your on a portion of your position, and raise that stop to about, let me see here. If it breaks right now, I would have a stop on some part of about 210, trading at 220.32. That's a little longer term position. Shorter term position, I'd have a stop at about 213.5. Just to say, hey, if you start breaking down below that, let me put it this way: maybe it's not a stop, but it's a caution. If it hits that moment, I would look at it and I would say, okay, be very careful. Most importantly, let me just see there's nothing's going on here. Most importantly, it's holding very well. It's starting the rounding top, but the weekly chart is still very strong at 98%. I love this LinkedIn chart. It's doing well. So let's just see. I've got a little problem. There will be a break. In the break, I have to do some switching. Got a little vocal problem there with the sound. I'm not sure quite what it is. So give me a second there. I'm drawing that oval pattern in LinkedIn. Suspicion that it's a little higher towards the 2.5-ish area, 224.25. And then next week, at the end of the week, it starts to pull back down. How it handles 213 to 211 is going to be very important in the next 3 weeks. So now, let me see. We've got a bunch of things going on, and I'm not sure quite exactly what I should do. I'll just keep talking. That's on the 103-minute chart. It's made a peak F at 221.95. It tried to retest that this morning. I'm just going to watch this real closely. Everything about it says high-level consolidation coming up. It's acting very, very well. So now let's go to the next one, which is Yelp. I should shout Yelp because I see that there's little issues here. My chart is gone. All right, folks, I'm going to do this again. Why the chart is gone? Let me just do this. Click, click. Chart is right back. There's the music. And let's see, the chart is right back. Should be right back. Yep, there it is. Okay, they clear that up. So, folks, the chart disappeared. Wrong. We'll be back. There's a break, and we're down 14 the Dow on 2 minutes.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Tiger Technicians. Now, we're looking at LinkedIn holding really well. High-level consolidation, making that pattern that I call the stork leg formation. My next Chapman Wave webinar, I'm going to talk a lot about this pattern. This has been occurring so often. I used to only use it for the Dow for about 15 years, and then I started adding it more and more to others, and it seemed to have worked on them as well. So we'll be watching this closely. Look, the dollar, in a sense, has done that. Oh, I didn't do all the numbers, did I, for this 22nd day of August. So the dollar is gone. It's actually now turning into a 1-to-1 propeller shaft move to the upside. Watching it real closely because gold just hasn't been able to do anything here. It's just an inside day so far, but it's really testing the uptrack support in the weekly chart, but that monthly chart says H goes to an M and then it retests the low. So I don't see much for gold at all here. So let me just run the numbers here. We've got the Dow down 17 at 17,021. You've got the S&P at 1989 down 2.5. Comp index up 6 at 45.38. The VIX index is up 30 at 12.06. Now this is going to be very interesting because the bank index suddenly came alive. The XLF yesterday, and look at this. This is a leg B, still holding very well and has broken to a new recovery high in the weekly for leg E, and the monthly is extended. So this is very nice, very quiet action in the XLF financials at 23.17 down 4. Let's see what Bank of America is doing. Must be down a little bit. Oops, no, there it is. Candle leg C. Wow, nice move. We had a caller the other day who was loading up on Bank of America, and I said I would only do it if I saw strength, not weakness. And so far, that's all we've seen is strength. Very nice. Congratulations. So now let's go on. We've got, so gold right now is trading at up 5 at 12.80. Silver's up 27 at, silver's not up 27. Silver is up 0.05 at 1942. High-grade copper is back to the 3.2s again. Very nice. And you've got the bonds up 430 seconds at 140 and 630 seconds. Now, this is going to be very interesting. Why? Because the TLT is still holding very well. It is not breaking down, even though everyone keeps saying rates are going higher. And, of course, at some point the rates will go higher. But isn't this interesting? So, in the meantime, back at the ranch, the U.S., and we get to the continuous contract of bonds. Yeah, it's holding in the up channel, mid-line, that dashed line, support. So we just got to watch this real closely. Everything about the monthly chart says that when the month finishes, if it finishes anywhere up in the 139 to 141 area, that's going to be very good because it's hints that it could go above the all-time high. This is on a continuous contract of July of 2012. So in respect to what we have, that's 5 points higher. I don't really see it going at this point 5 points higher, but so far it's defied all the bears in bonds. We'll see what happens. Let's just see at the junk. JNK is the junk bond. Spider Barclays high yield bond ETF. Look at that. This is, I think, also leg B is doing the same as the market. Look, A, B. Isn't that amazing? The junk bonds have come right back when everybody said, get out of junk bonds, get out of junk bonds. Back in the beginning of August, it hit 41. It hit 40.06. Trading right now at 41, having hit 41.38. It's at 41.30, down just 3 cents. A point in this junk bond ETF is huge, up or down. So isn't that interesting? So now let's see, back to our story. So LinkedIn, come back full circle. High-level consolidation, 120-minute chart says acting very well. Will it retest the high of 221.95? I think it will, and I think it's going to break above it, and then it'll come back and do the retesting. Meantime, back at the ranch, Yelp. Now, I look at Yelp once in a while. I don't really use Yelp. In fact, I don't use many of those things. But this is a leg D. Probably a peak D if there's no new high today above 81.25. And the question was, I'm in this for the longer term. I'm in this for at a lower price. Basil, what do you think is going to happen? What are the parameters that you're looking at? Will it make leg C just above peak B at 82.82? The high of July, the week of July the 4th was B, and isn't going to do that. And I suspect, yes, it's going to do that. But here's the real issue. The monthly chart, this is really nice action. Everything about the monthly chart is suggesting to me that there's an H pattern unfolding. I hope to be proved wrong. And I'm not going to try to get you out of a position that you've got a fabulous profit in. I don't want you to get out early. So what I said is I'd look at it and I would suggest moments of just maybe taking a little bit off. My suspicion is that the 9-period moving average of 77.43 is trading at 80.81, up 49 cents. That 9 EMA is going to turn out to be really important for a number of reasons. If, in fact, it makes leg C above 82.82, the whole 79 to 77.20 area should be very strong support. 72.73 is the 9-period moving average in the weekly chart, and it's way above that. It shouldn't get back there, not in this particular phase. However, this is leg D. It could begin to stall, and it could go to an E, maybe even an F, as the general market goes to the C and a D. That's if I'm correct in my anticipation. So I'm going to make two suggestions. One is that if it goes much higher than the 81.25 high of yesterday, if it goes, in fact, if it just breaks it by 1 penny, I would take one part of my position and I would have a really tight stop, and the stop would be today's low of 79.50. So let's call it 1.25 points. I'd have a trading stop knowing I would be taken out, but I'd rather get out on the rally than to give back 2-3 points on the down move, when in fact it could be the very area that we start to think Yelp is potentially another buy. In other words, to add to. Let me just, that's the second part of it, let me just clear this up. Number one is I'd rather have a trading stop in some of my position, keep the core position. Number two is I'd like to make the trading stop reasonably tight. It's held beautifully today. It's up 55 cents when the general market's down. That's a great sign. And the QQQ series is right now up 18 cents at 0.18%. So I like that. So I'm suggesting don't hurry. Just keep some kind of a trading stop, and I'd rather take something off going up, because you've still got your core plus everything else, plus the bonus of it moving maybe up another point or two. And the other thing is, where would you put that back? I'd wait for market conditions by next Thursday, Friday, to tell me whether Yelp is still acting beautifully or whether it's starting to show some weakness, because the stochastic at 96% and the MACD is still expanding. Look at the histogram. There's nothing. This is just a beautiful chart. I would rather take something off going up and adding to it going down than taking off going down and then wondering what the heck, where to add to. So let's make that clear. I suspect that this is a pattern that's going to fail, and it's going to fail somewhere around, if it can get there, between 84 and 86. And that test is the test of the monthly chart that says, are you able, first of all, you have to break above 80. Yes, you have to break above the 84s. You have to get to the 85s to really be talking about this way. Most importantly, if there is a failure at any point in the next 2 weeks, and suddenly you're looking at Yelp at 76, that monthly chart kicks in, because that MACD, that fast-moving average, will start to turn down, and the stochastic's only at 59%. So I hope I'm clear. Two ways. You've already in it and much lower down. 2 ways of looking at it. Take a little bit off as you move up, and then we will look together to see where you can add to on the way down. Put that back, in other words. And the other is, we've got to see how deep the correction is when it comes, because that's going to impact the monthly chart. But so far, everything's looking good. Good. Now, questions in the den were, let me just go back and find it. If I can find this. Echo. All right. IBB was a question. Let me just move my 120-minute chart right there. Here we go. IBB trading at 265.09, up 64 cents. Now, on a very short-term basis, it went. There wasn't any other way to count this. This is very interesting. A, B, C, D, right there. D. That should be an instant restart. Oh. That's an unconventional instant restart. A, B, C, D. That does turn out to be a D. I just did this really quickly yesterday. That is a D right there. I'll clear this up so that those of you who study the Chapman Wave methodology are already clear on what I did. This is a very interesting technique. This is looking at IBB, the iShares NASDAQ Biotech ETF. And it's trading right now up 0.27% when the general market is down 16 to 0.16 to 0.18 in the down the S&P. Good action. And it's saying to me that there's a chance that this very narrow channel, look at that, narrow channel, it's actually a Chapman Wave falling axe expansion right there, is going to tell us what's going on. Because if by Monday the IBB is below 261.60, that's 4 points lower, gosh, that would say, be careful, because there's even more digestion to come. And if in fact it is above 267. It's at 265.15 right now. If it's above 267, it says, hold on, leg D is coming to go above 268.60. What is my analysis, my eye analysis? My eye analysis says leg D is going to come, and there's a trade here for those of you who have courage, and that trade is in the IBB, just for a real quick to the upside, a quick trade. Maybe it's even an option trade. I'll see if I do that for my subscribers in my opening call. Let's look at Gilead, or GILD is a symbol, trading at 104.08, up $1.82. This is leg E unless it's recycled. My feeling is it's probably an E, but the stochastic's at 92%. MACD is still very good. And it's leg C in the weekly, and that says that it should go to at least a D. I tried. I hunted. All it needed was the high of 83.70 on the week of the 23rd of May, which made peak A. Excuse me. Pulls back, and then it snuck by 1 penny to 83.71 for leg B. No, couldn't do that, right? It goes to what? 83.46. Instead of 83.71, and then it pulls back. So that should have been B, and this should be C, and this should be D. Well, shoulda, coulda, woulda. This is C. There's no other way I can count it. So this is C, and it says that in the month of September, we should still go to a higher high. I can't believe it. Unless I land up having to take something as a phantom peak. We'll see. Meantime, the daily is going to be the clue, because we will be going short the IBB, or and Gilead is one of the major contributors to the IBB. At some point, I'm sure we'll be going short again. And this is peak C in CLG, D in the week, in the monthly, and D, I think, yes, D in the weekly. So most of these are getting real close to some kind of a pullback of substance maybe. And the 120-minute chart of IBB was the question. What did I say it was? Yeah, made a peak D in that alternate count with that instant. This is called an unconventional instant restart, and says that at some point there should be a pullback, and that pullback should go under 258.88, 7 points lower. But you're going to have to wait. So in the meantime, back at the ranch, Gilead, CSIQ is another question in the den. CSIQ, I'd say, is making a high-level consolidation, and I now don't know. I suspect I won't have to. This is Canadian Solar Inc., and CSIQ trading at 34.51, down 13 cents, has made a peak C1. I could call it a peak C2, but the MACD and stochastic are so strong, I feel absolutely sure that there will be a higher high above 35.39, even if it's by 1 penny. But I think leg D is coming. Leg C in the weekly chart. Now, this weekly chart doesn't have to go all the way to the top. This is a retrace. Remember, in the Chapman wave, there's something they call the retracement failure mode. And what does it say? It says that if there's this Grand Canyon slope to the downside that it has to recover from, and the all-time high in this case of CSIQ, Canadian Solar, which was made at 44.50 the week of the 28th of February, because we went all the way down to 21.38 the week of the 23rd of May, this is retracing back. And at any point in a retracement, you can fail. You know, at all-time recovery highs or all-time highs, if you've cleared any left side big hurdle, there's just a real good chance that you are going to go to at least a D in the Chapman wave. That's what I'll be teaching in my next Master Trader series. Why you can expect those leg Ds. We'll see it's going to happen in the S&P and the Dow. I suspect it will. I'll be right back. We'll finish talking about CSIQ, Canadian Solar, straight after this break. And the Dow is down 35, S&P's down 4. This is the first day of consolidation. I'll be right back.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks, we're back. Basil Chapman, Tiger Technicians out. Dow's down 25. S&P's down 3. Don't forget those Tiger dollars. You've got until Sunday night. 40% off. It's amazing that they could do that here at TFNN. Anyway, let's go to, so as CSIQ, when I was looking at CSIQ, high-level consolidation. My suspicion is I can do the same thing right here. High-level consolidation means you've got to store good information. There will be a pop-up. Then you've got to be careful. And my suspicion is that by the end of next week, it starts to pull back some. Maybe we even start to get a little bit of a correction down to the 31.50 to 31 area. It's trading at 34.63 right now. Not sure, but we'll do one thing at a time. So that's good. And the 120-minute chart has gone to a G/C with a huge MACD turnaround. But usually you get a price decline. And all this has done is gone sideways. Look, I could even make a case that there's an oval formation right here. Look at that. So I think it's holding very well. If you're long, just stay long. I would, again, same as LinkedIn, I would take a little bit off if it breaks above 35, 39. I just have a trading stop to take something off, and then we'll deal with the rest later on. And if you're looking at Microsoft MSFT, look at this. Microsoft, just walking the 9-period moving average in the 120-minute chart and the monthly chart, leg E, peak E, but if it goes above 45.71, that'll be leg F in the weekly chart, and there's that cup formation. That cup formation says taking a lot of time, holding very well. I suspect that 45.71 will be taken out. That was the previous recovery high, and we could go between 45.90 and 46.80. That's kind of the area I'd be having a good look to see as a topping out on the shorter term. So I hope that helps the questioners. Now, let me just do this. This is what I'm looking at. The VIX index. The VIX index, I think, has to wait until next week before it gives any kind of a signal that says, I'm ready now to have another rally to test the 1351 200-period exponential moving average in the daily chart, maybe even test that big candle. Was it a week ago, Friday, that there was that huge move? Yeah, 14.94 was the high on the 15th, and then it closed way down at the 1315 level. So I suspect we're starting to make some kind of a turn. We're not trading that way in my opening call. We do have long positions. They're actually long positions I'm hoping will survive any kind of market pullback. I'm hoping they're kind of more intermediate term. We don't know, but we'll see. Now, I will be adding to the shorts later next week. I'm pretty sure about that. I'm watching the VIX real closely. So far, it's this A pattern. It's just straight up and straight down in the weekly chart. Monthly chart hasn't even acknowledged that there's been a rally. It did last month at the end of the month. We'll see what happens by the end of this month. So, VIX index. Under 1160, I'm thinking it goes to 1140, maybe 1120, but somewhere in the 1140s. On the upside, it needs a break into the 1320 area to even suggest that it can break 1351 resistance of the 200-period moving average, and then to get into the 14s again as it did a week ago, but this time to hold it. So that's not ready yet. So on the Dow, we're in leg B, possibly a peak B today. Let's deal with it as if there is a peak B, because there's going to be no new high above the 17,074.59 high of yesterday. That would say it's a narrow bar. There could be one more pop up, but if there is a close on Monday below 16,984.52, that's the low of today, then there's a real good chance we'll take until Tuesday afternoon into Wednesday to start trying to make leg C. And that will hold leg D up until Friday or Monday in a week. So we're going to be watching this real closely because the MACD and stochastic are very good. It's suggesting that if there is any turn down to the downside to break 16,700 support in the Dow, it's going to have to be bad news that's taken very poorly by the market. Stay tuned. Great programming all day. My service is the opening call, and you can check it out on the front page of TFNN. 2 weeks free. And don't forget that 40% discount. And stay tuned for Nico and Paige. I'll be back Monday. Have a great...
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.